everybody. Welcome to the Energy News Beat podcast. We are live here at NAPE, and I'll tell you what, this is absolutely a real treat. We've got Steve Kinard, and he is with Shalehaven Partners, and I'll tell you what, this is really exciting. Welcome to NAPE.
Thanks for having me, Stu. You know, it's kind of fun to be the first recording here, kicking off NAPE. Everyone's coming into the doors. And I feel like this is the year of the American oil man. In the Chinese, lunar calendar, it's the year of the snake. Good luck with all of that with the snakes. Here in America, it's the year of the oil man. You can feel it here at NAPE.
I like that. Now, I did not have President Trump going to claim Gaza-Lago instead of Gaza. He's now going to put a Mar-a-Lago in Gaza. Who's going to say that we're not going to have Gaza-Lago in Midland, Texas, right?
Anything's on the bingo card potentially at this point.
Well, now you've got a really wild background, not only in politics, but oil. Tell us a little bit about that.
Sure. I mean, it is a little bit unconventional to say the least. I mean, I'm a born and raised Dallas, Texas guy, and I went to A&M undergrad and eventually decided I wanted to work in the oil and gas industry. And so I did that, was based in Houston, was part of starting an E&P, private equity backed, fairly traditional in that sense. Right. We sold that, moved to Dallas, was working on the banking side. And then I fell into high performance computing in the oil field during the COVID time. Yeah. And everybody had a little more time on their hands at home. And I heard about Bitcoin mining in the oil field. And when we were operating in the company I worked at, we had some stranded gas and some issues, marketing our gas. And I said, I don't know anything about Bitcoin. You can tell me that there's a way to get more than zero for that gas. I'm very interested in that. And I went down the proverbial rabbit hole. I came out the other side, leaving oil and gas for a bit. I worked at the Texas Blockchain Council, and I'm proud to say, we were part of working on bringing the Bitcoin mining pavilion that's here at NAPE still. Nice. Become something of a fixture here. And through that, I got involved more in the political process, both from a pro-energy abundance perspective. I've always had that conviction, seeing American energy, and that we should lean into that, but also pro-technology, pro-innovation, and in making Texas, the center of the world.
How fun.
So ended up going to Austin. We're getting more politically involved. Somehow got it into my head, I'm going to run for political office. I just felt like if you are not in the arena, you can't complain about what's going on. I had plenty that I didn't like, and just felt a calling to do that. Started from nothing, no campaign manager, no name ID, none of that. And we were blessed to go through that process, win the primary decisively. Senator Ted Cruz endorsed our campaign, Governor Greg Abbott, and ultimately we didn't get the win in the general election. Ended up about 52-48, and so it was a close one. Met a lot of people.
Are you going to run again?
Still glad I did it. My focus right now is really back to the oil field and Shalehaven Partners. Now, I'm not going to say, no, I won't run again. I feel like there's a part of me invested in that process, and I do want to stay involved in that. And I want to make sure that Texas is a leader in freedom and energy production and innovation. I'm not sure if that means running for political office again. Right. I'm open to it.
Well, tell us about Shalehaven, because I really like your website. It's Shalehaven.
Shalehaven.com.
Shalehaven.com. Tell us about your site and tell us what you guys do.
Sure. When I was in the banking side of things, oil and gas banking, right, I saw all kinds of deal flow coming through. And at that time, this is probably 2021, I started to see more and more direct wellbore investing, non-operated wellbore investing. And I got interested in that because it's a way to get an interest directly in a drilling project at a very low cost structure, because you're often single-digit % in terms of your interest in a project. So you've got a competent operator out there that's carrying most of that, for you. And I saw the attractiveness of that. I also understood why a lot of the bigger private equity shops weren't interested, because it's generally smaller checks that you're writing to get into that. But I saw some of the economics on that, and I just knew from firsthand experience that they could be very compelling. Fast forward to late last year, as I was coming to the other side of the election and didn't turn out the way that we wanted, I'd met a lot of people, and through my network was fortunate to meet my partners, Shalehaven, Graham, and Nathan, and they had seen some of the same, and it started shooting in 2024. Raised up some money. We're already drilling wells, and we're kind of proving up that concept. And, and I told him, typically you meet someone, maybe it takes them longer to come up the learning curve of what you're doing, but I understood right away, was pulled into that. The differentiated approach from Shalehaven, because, look, there's a lot of different oil and gas investment. I do think that we have a differentiated value proposition, and there's a couple of ways that we do that. The first is Shalehaven has a separate fund for each calendar year. So we had a 2024 fund. We pass along the tax advantages, which are substantial, of IDCs and investing in oil and gas to reduce your tax burden, and people should reach out to us to learn more about that. 2025 is a new fund for this year.
Isn't that great?
Where I've come in. So it's a really kind of clean and simple way to plan around the tax advantages of the IDC.
You know what's kind of fun? Everybody is out there saying, President Trump is saying, drill, baby, drill. But I think that there is now a difference to this, and that is instead of drill, baby, drill, it's going to be drill, baby, drill when fiscally responsible, because I have seen so much fiscal responsibility in all the E&P operators that are out there. They're giving money back to their shareholders and stakeholders like you wouldn't believe. So investing in oil and gas is not just going to be drill, baby, drill to the floor. So it's drill, baby, drill, and then give money back to the investors.
That's absolutely right. The term we kind of throw around is mailbox money. We have no debt in our fund right now.
Isn't that great?
Invest in the drilling and start sending that money back to our investors. And you get a level of liquidity that, frankly, is hard to find in any other investment that typically have longer lockup periods.
Oh, you know what's fun is right now my investments in oil and gas, I'm getting 32.1%. And that's on last year's money. And that does not include the tax deduction. So I love me some mailbox money.
And I can concur that, that is a very, achievable type of target.
It depends on the deal. Exactly. So when you sit back and take a look, it is the ESG movement has been horrifically bad except for the governance in the big oil and in the private area. It has really changed the face of investing in oil and gas.
Yeah, no, I can concur, and I lived through it on both the equity and banking side myself of kind of the heady days of stretch, debt and all this kinds of exotic structure. And a lot of that is gone, and it's back to kind of the hard, look at the numbers, do what makes sense.
Yep.
Stay in the fairway.
Oh, I'll tell you what. Now, so where do you see oil going in 2025? Because everybody's sitting there saying, I don't want to set you up, but I've got my opinion. And I think, President Trump has got Doug Burgum for Interior, and he's got Lee Zeldin for EPA. He's going to really help cut that out. And then we have the great Chris Wright. And I mean, he's got a trifecta that he's going to help really lower our cost as oil producers.
I think the inner circle in this administration is a group of all-stars. I'm glad to see it. I was a delegate for President Trump in Milwaukee.
No way.
Yes, sir. That was a phenomenal experience. And, part of why I wanted to do that and support, his vision, energy abundance in America. So it's near and dear to my heart. I think one of the most interesting dynamics that we're seeing in the energy space is the confluence with technology. President Trump, in one of his executive orders, characterized it best where he said, we're in an energy emergency. We are in a time where we have to build and be focused on winning. Just focused on China. We need to be focused.
Yes.
And building here. He has set the tone for that. At the same time, he's approached technology, and particularly AI, with a similar fervor of we must win and we must build. In this sector, I thought it was interesting in recent weeks, Chevron was the first major publicly that they have a program to start co-locating data centers, primarily AI data centers, with their energy infrastructure. I was just at breakfast this morning speaking with some gentlemen with a lot of gas production. Same thing. Everyone's starting to look at it. And it makes a lot of sense because I can tell you from personal experience, I've been to many data centers, that the demand there is going to continue to go up. There's something called Jevons paradox. As chips and models get more efficient, aggregate energy demand actually goes up because it facilitates more and more innovation on top of the technology. You bet. Isn't that remarkable? And so we're seeing something of a golden age, I think, in the build out of data centers. Winning the AI race is downstream of winning the energy race. I think that dynamic is going to play out a lot this year. I see a big growing new demand center for gas, particularly from that. And so I'm bullish around that in terms of supporting gas prices longer term.
Oh, you bet. What's kind of fun is we sit here at NAPE and everything else, everybody, all the renewable energy, and everybody thinks that they can run data centers off renewable energy. And then you have Bill Gates and you have Larry Fink coming out and say we need lots of natural gas. That doesn't sound like renewable energy.
I think reality is coming home to roost right now. Because, pretty soon China's going to lap us building coal-fired plants and reliable energy there to fund their technology industry. We're at a point where we have to get down to brass tacks and speak in reality. And the fact is we have abundant natural gas. We can deploy that. It's reliable. And we need to execute on that strategy. I think President Trump's providing that leadership. I'm glad to see it. And I'm going to take a little bit of a contrarian take as well. I'll share with you something that I heard earlier this week. There have been so many headlines in recent years. The internal combustion engine is going away. We're going to electric cars. And look, I think Tesla makes a cool car. I know plenty of people that own them. I'm not against that. I'm for an innovation economy. That's great. Here's the reality, though. There's a large switch to electric vehicles, particularly with automation getting closer and closer. It's a lot of proofs. The sheer amount of power that needs to be built out on the grid. I'm not talking about building all the batteries. That's an issue that's been more addressed.
Oh, absolutely.
The grid itself, the sheer amount of energy generation that we would need to service our entire driving fleet is almost mind-blowing. Now layer onto that we have a whole new demand center coming from AI that we already need to significantly expand our grid. I don't think the numbers add up. I think all of a sudden, if you want to deploy automated self-driving fleets at scale, an internal combustion engine looks like the best way to do that effectively and actually get it to market. And I think we're going to start to see that dynamic play out, that the kind of promise that oil is done and we're going to zero is really a fable.
You know what's fun? Have you ever seen anybody make an iPhone out of a windmill? You got to have it. You got to have the oil byproducts in order to do that.
Triple products.
Absolutely. So how do people find you?
We're at shalehaven.com. I'm easy to find on LinkedIn. I would encourage people to reach out and get in touch with me there. S. Kinard, as in my name, at shalehaven.com. I'll respond to the email there. We're happy to have closed out the 24 fund. We're drilling right now in the Bakken, the Wolfcamp, and the Haynesville. That fund results will start coming in soon, so we're ramping up for 2025. We'd love to hear from people, and thanks so much, Stu.
Hey, thank you for stopping by the podcast. Drill, baby, drill. I love it. Hey, thank you very much.